and gentlemen, I don't want to hear it. Okay. It's 10 o'clock. Welcome all. We have Tevis, Steve, myself, but most importantly, we have Roy. Roy, how you doing, my friend?
Good. How are you guys?
We're good. Not as good as you, though. Anyway, let's move on to the show. We have everyone, how everyone's feeling. That's great.
Bro, people starting with the Roy stuff already. Steve, get out of here, man. Why are you like
just typing?
Kick him.
Yeah, Roy, can you go through your course today? We need to know. Okay, so this is actually the same week that SoFi has reported earnings. Although they reported on Monday morning, the last Friday at closed at $7.62. Today, after this week, much volatility, stock running up 24% on Monday, all the way back down. The stock closed this week at $7.88. Looking at about a 16-cent increase on these earnings. Tevis, justified or what's going on here?
Man, that's such a loaded question. Yeah. SoFi stock over the past 5 days is down over 10%. I made a video earlier today and I basically said, look, if you looked at what SoFi closed on last Friday, it was around 765. If you looked at what it closed today, it was around 788. There's like a 20-cent delta between, week over week. If someone were to zoom out and look at this thing on like a yearly basis, not one person could point and tell me, oh, this was actually the turning point when the company turned profitable. Like not even a blip on a weekly basis.
Sure. Yeah. Roy?
Yeah, I mean it's completely unjustified. Kelly, said it that it's a broken stock. It's not quite there. If we get like under 5, yeah, but it is divorced from the fundamentals at this point. It can go, broken stocks. Typically, we're talking about them on the downside, and we know like the stock is a different animal than the company. The company, you know what you're going to get every single earnings. They just execute, and this quarter was fantastic. The earnings call was well rehearsed. We already went over that. And so you know what you're going to get with the company. You know what you're going to get with the stock, and it's volatility, just all over the place. I actually sold puts, I think at an 8 or 8.50 strike into earnings, and I ended up buying them back just for like 5 cents. They would have been in the money at this point, but I just was like, I'm just going to buy some shares because it's under $8 now. I knew that it was going to fall. I was hoping to touch 8.11. I was wrong on that one, guys. I'm sorry. And I was really hoping that this would be the time that GAAP profitability would say, okay, no, this stock is serious. This business is serious. But it's disrespected by analysts, and we'll talk about that today.
Yeah. It's honestly like a swing traders and options traders paradise a little bit because of how predictable that trend has been over the past 6 to 9 months, hovering between, let's say, 7 and 10. Just ping pong back and forth between those numbers.
Yeah.
I mentioned this on the SoFi chat to say, even as a long-term investor, it sort of makes me wish that I'm also like trading it or small portions of it on the side. But then, knowing my luck, this is going to be the time when they break that trend. And
that's what I was just about to say. The day you do it is the day it breaks trend for sure.
I'm not doing it.
It's coming at some point. We don't know when. It could be a long time. It could be 2 days from now, or not 2 because it's Sunday. But
Yeah.
I mean, look at Palantir. I think took 2 quarters. The second quarter, it just doubled, like straight up doubled within a month.
2 quarters and the headwinds changing to tailwinds. The AI just push from ChatGPT. I think fintech will have that possibly this year, but if we get that, maybe another quarter and some tailwinds instead of headwinds, maybe.
So I don't want to pivot too far away from that because I think a lot of that has to do with a rate cut decision. But first, before we go on, I also wanted to get Steve's opinion on it. What were your thoughts about the stock movement this week after seeing earnings? What did you think, Steve?
Don't get mad, but I hope it goes to 5.
Right. Fair enough. Fair enough. So do you think that
Because
this
I will
was
buy the shit out of it. Like
Yeah.
I was buying this week, I was buying last week, I bought more today. I think I bought 2 times after earnings came out. Like whatever. I'm in this for the long haul. It goes down, I'm going to keep buying.
Right, right.
Did you just like dramatically pause so that Tanner could start talking just so he can't beep you because he's mid-sentence?
Yes. At least one person's paying attention.
Okay, well, so if I can ask a question on that note, so you're hoping it goes to 5. What if David Chiavarini or whatever his name is, I'm not going to learn how to pronounce it because he won't learn SoFi. I won't learn how to pronounce his name. But what if he's right? It goes to $3. The macro has not changed, and there's nothing changed with SoFi. How heavy would you buy that dip?
Pretty freaking heavy. I mean, I would seriously consider selling some positions and moving additional money. And right now, I'm only buying with new capital. I'm not selling anything to buy. And look, I'm very, very diversified. Like I got levers to pull if I want to, but I don't want to because
Yeah, he does.
being overly diversified protects me. But if this takes another round trip down, I don't know, man. This, if nothing changes with the outlook and this continues to slide and you get into like the 6 area, I mean, I would definitely consider maybe getting out of, I'm not going to say what I would possibly get out, but I would consider getting out of something or maybe 2 things.
Yeah.
Dude, if this thing goes in back into the $4 range, let alone 3, because I think that, like, let's just be realistic. The bottom was at $4.50 roughly. If this thing goes into the 5s or 4s, on camera, happy to say it, I'm probably going to be selling every single thing I have and just going all in, or just maybe SoFi Tesla 50-50.
I was going to ask, would you sell Tesla?
Yeah.
Really?
I would definitely sell good chunks of Tesla. Probably not all of it, just sentimental value, but good chunks of it for sure. If nothing in the fundamentals change, if nothing in the macro changes, it's just a overreaction. It's just silly not to, man. Because okay, look. So here's the thing. And we can talk about specific earnings, metrics, but the one thing for me that made it a 10 out of 10 earnings was the fact that Anthony Noto gave us guidance through 2026. What do we know in 2026? We know that their stock options are going to vest. And it was timely because it made me think about this entire court case with Elon and the commentary around that, how it was this ridiculously aggressive comp package that no CEO out there would even take. There is no CEO, like Mary Barra at GM, Ford, whatever you have it. Nobody would say, okay, let me not make $50 million this year on the off chance that I can 10x my stock and get $50 billion. Nobody would say that. Okay. And how I linked it back to SoFi is Anthony Noto provided these targets. And in addition to that, provided a product playbook, a product roadmap that includes SMBs, that includes all of these different aspects of how they can grow their business to 2026. And at the end of the day, I think that he's the only other example I see where a CEO is tying their net worth to their performance through those PSUs, right? And so the shareholders are direct beneficiaries of Anthony Noto hitting those targets. And so, for guidance, yeah, they came in at 8 cents versus the 6 cents that the street is expecting. For 2026, David Chiavarini can say it's aspirational and Morgan Stanley can say there's execution risk, but, go fuck yourself, because really there's no company in the world that does not have execution risk. But if I'm thinking about what is the company that I want to put my net worth behind, I really want to put it behind people that back themselves and that have the confidence to do that and that have the confidence to put their skin in the game. And realistically speaking, I know Anthony Noto is going to do everything in his power to execute because he makes like $300 million if he does. And I want to be on the back of that to ride those coattails.
So from what a lot of what I can see online, and IP has been helping me out a lot on this. So IP banking research, for anyone that is wanting to know, a past SoFi bear that's kind of turned very neutral recently, now looking forward to SoFi and seeing what their tech growth is going to be like. But they're on Seeking Alpha if anyone's interested in finding their stuff. But they've been really helping me with a lot of the street guidances and stuff. So a lot of what I'm reading that IP is sending me is just the fact that they don't believe what Noto is saying for their 2026 guidance. That a lot of it is, hey, your 2024 guidance does not look great. We don't suspect great growth here. So how are you going to squeeze out even extra going out into 2025, 2026 if we're getting into lower rate environments and coupon rates are cutting and you're not going to be able to generate as many profits from their lending segments?
Yeah,
so,
but look, I think that just to respond to that, right? Like, what is the thing that separates this game from a casino, right? I think it's that predictability, and the fact of the matter is, I place a higher degree of confidence on SoFi's management when they say something because they have a proven track record of having backed up what they've said in the past. There's plenty of you take PayPal, for example, with regards to the margins turning around, or take other companies with regards to product promises that they've made that have not followed through on their promises. And that's because, things happen, things get pushed back, timelines, whatever. But the fact of the matter is that Anthony Noto has held true to all of his promises. And for over 2 years, SoFi has not triple beat a single time. They've always beat on revenue, beat on the EPS, and always raised guidance. And they did that for 4 quarters out of 4 quarters in 2023. And as a result of that execution, it lowers my sort of risk involved in believing every future promise that he's going to say until he starts missing promises.
So can I pose a question to you guys then? Because I saw a comment yesterday on one of my videos that I thought was very interesting, where they said, sandbagging guidances can only lead you so far. If you continue to do that for so long, it can actually kind of have a negative effect, because you're saying what's happening into the future is not going to be exciting as what we just put out. And so do you think that there could be a possibility, and I'm playing devil's advocate here because I'm looking for answers, but do you think that there could be a possibility where SoFi always hangs out around near fair value or below, because there isn't guidance which is expecting high growth rates?
I mean, I don't know what earnings people saw, but they gave pretty high growth rates through 2026 and beyond. So,
what high growth rates? Because when compared with, like, when you say SoFi is a bank, their growth rates are extremely high. So I guess maybe just if we can label that.
So I'll share my screen, because this is what Compass Point was looking at whenever they were putting a $4 price target on their stock. This is my chart, so it's not exactly what they were looking at, but what essentially they were looking at was lending. Oh, sorry, didn't mean to adjust that. Lending growth would be around 92 to 95% revenue for next year, or a 6.5% decrease. Financial services would see a 75% increase, and technology platform would have around a 20% increase. Now, corporate revenue, I just put as what it was for most of the years before this last year. This last year kind of had a benefit in the last quarter. It was kind of breaking trend, but let's even say that was 0. That would place SoFi's growth for next year around 13 to 15%, which is much, much lower than their last year of 35%. Now, I will add something to this that was also brought up in a comment. I think it was B-Dubs, if I'm... Yeah, okay, sorry. Yeah, B-Dubs, it was you. He's saying you have to bring up my comment as well. Yeah, I was just about to. So one thing that B-Dubs brought up to me that we forgot about our last video was the idea of 50% from lending and 50% from the other two segments. So if lending will contribute $1.25 billion, then that would actually put total revenue at about $2.5 billion, somewhere around there, which would be very similar to the idea of having no corporate revenue, but still.
And that's only assuming that lending is actually down 6.5%, which I think it's actually going to come in up single digits.
I totally agree with you, but this is what I think the street is seeing, because SoFi is giving these more conservative outlooks quarter after quarter.
But even this week, we had an analyst come in and basically disbelieve the numbers that SoFi was putting out. And they said, no, these are way too high. There's no way that they'll hit those. So you can't have it both ways. I mean, if you sandbag, if people are like, no, those are way too high, it's like, what are you talking about? And then somebody else on the other end is like, okay, yeah, you're sandbagging, quit doing it. Otherwise, we'll actually believe you and we'll rate you that way.
Right.
So
right.
I don't know what the answer is there.
Look, but at the end of the day, like, Tanner, you agreed, right? If you agree that, okay, well, the underlying assumption is that SoFi will continue this trend of raising guidance every quarter and coming at the top end of their guidance, then let's just say that lending is single-digit growth. And let's just say that 50% comes from financial services and technology platform put together. Then all of a sudden you could have a world where, you have 2.6 or even something, higher. And so that 35% can very much stay intact. And the amount of time where an analyst needs to see the actual results in print, and us as retail, we can forecast out and we can say, okay, well, here's the trend. Let's just extrapolate that trend. That's alpha, right? Like, that is an amount of time that we can accumulate and take advantage of the stock being depressed. Because once these big banks flip, then, they'll have accumulated a sufficient position at the bottom, right? Sell, 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 sell. And they're shorting all the way down. And as they're shorting, they're accumulating shares. And then what are they going to do? There's 2 quarters or maybe 3 quarters of profitability. It's not feasible anymore for them to say sell. Then they're going to start flipping and they're going to say buy, 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 so that they can, increase their own bags, right? Increase their own gains. So my point is that if we take management at their word, which they have never given us a reason to doubt, then this entire time is alpha for us that analysts who are not taking management at their word won't have.
Well, actually, I think taking them at their word would be a disservice, because they will outperform their word. That's actually the truth, right? They've actually done better than what they've stated. But I want people to be very clear. I'm playing devil's advocate here. I'm not even believing what I'm saying right now. I'm just,
Always so bearish on SoFi.
I know, it's crazy. It's crazy. Steven, what do you think about all this?
How about this? I don't care what anybody else thinks. Like, I don't make investments.
Great on a podcast.
Yeah, I don't care what anybody thinks. I make investments based on my research alone. I don't go to any of the services that I have access to from the different investment firms that I have money with and go through analyst reports and go through these things. I read the earnings calls of every company I'm invested in. I listen to every conference I can. I go through the numbers. I do my own research. I think the majority of analysts are missing the bigger picture with SoFi. And I could be 100% wrong. And here's the difference. I could lose every penny that I have invested in SoFi, and it would suck, but it would not kill me. Like, I would still be able to sleep at night, and I'd be mad, but I wouldn't be pissed, if you could understand that logic, right? Like, I really do think that people should not invest what they can't afford to lose. And that's one of the reasons why I'm very diversified, because I protect myself from myself. And everything that I'm seeing, people have to start actually thinking outside the box. When I say people, I'm saying these analysts who are looking at just the same thing that they always look at. The bottom line is all these banks have to upgrade their architecture. Like, that's non-negotiable. There's new compliance laws that continuously come out, especially with all the cyber attacks. There's so much that's going to happen in the next 5 years. To think that SoFi's platform is not going to be powering a small percentage of their competitors is kind of crazy to me. And that's going to be the key differentiator because they will be generating revenue, reoccurring revenue from their competitors, and that will possibly give it a tech valuation. The members from SoFi are the only ones that matter. I don't care what one analyst versus another analyst thinks about SoFi being able to continue its growth rate, or if SoFi's app is good, if the bank is relevant. Guess what? Their freaking deposits grew by 156% this year, year over year. Their members keep growing. Obviously, people are finding value in it. Now, whether these analysts are finding value in it, I could give a shit. Don't care. Like, good. Let SoFi go down so I can buy more. Don't care. Like, I don't think people have watched Anthony Noto's speeches from years ago. I don't know the guy, but he seems like one of the highest integrity people in Wall Street that's running a company. That's a former Army Ranger, graduated from West Point, okay? Wharton School of Business. He's held countless positions in the banking industry, from Goldman to being CFO of the NFL and Twitter. I mean, when he guides, he's not giving guidance to fluff it so he gets PSUs. I truly believe that he is giving guidance because he is sick and tired of people doubting this stock. And even if you come in at the low end of this, I'm going to show this. I just whipped this up. Like, this is kind of freaking crazy. Is it big enough?
I'd like a zoom, but yeah. That's much better.
I mean, based on 2024 through the low end of 2026, and I'm going to 2 cents under what Noto said because that's what's on Seeking Alpha right now is the consensus estimate from 18 analysts. Wait, hold on. Sorry. I got to retract that 18. I changed the stock. Hold on.
You mean the 53 cents for 2026? Is that what you're talking about?
Yeah, 7 analysts have it as 53 cents for the consensus EPS estimate. SoFi is trading at 15 times 2026 earnings, and that's at the freaking very low end. If they even come in, let's say they come in the middle at 70 cents, they're trading like a tobacco company. Think about that.
Yeah.
And then if they come in at the high end, they're trading under 10 times forward earnings for 2026, which, keep in mind, 2026, the start of it, is less than 2 years away.
Well, that's not high end. That's beyond expectation.
No, the range was 0.55 to 0.85 for 2026. It was a big range.
I thought it was 55 to 80.
To 8, yeah.
Was it 80? I thought it was 85 for some reason. All right, so 0.8. I mean, still trading at less than 10 times forward 2026
Right.
earnings. So for people to doubt him is one thing, that's fine. But if he pulls this off, think about what NVIDIA has done. Think about what Tesla did. Think about how Amazon trades. I mean, Amazon has traded, it still trades at freaking 40 times this year's earnings. Amazon's never traded at a realistic valuation from what people think is realistic. I mean, JP Morgan, obviously they don't have huge growth spurts.
Yeah.
But I mean, they're trading at 10 and 11 times earnings. For SoFi's growth, I don't think that they should be trading at 10 times earnings, forward earnings.
Right.
I mean,
right.
It's just, I don't know. It's crazy. It's as crazy as what PayPal's doing, especially with what PayPal's proven. It's just nuts.
Yeah. So one thing I will say, Stephen, I agree 1,000% with everything that you're saying, but the fact of the matter is some people will make outsized bets on SoFi, will be gambling with money that they can't afford to lose.
They shouldn't do it.
They shouldn't. And I agree with you. They shouldn't. But people are people, and people will do, dumb things. And I saw one comment from Doug just a little bit back as you were talking, which basically said something to the effect of, yeah, these are all great arguments, but here goes another year. Basically, the opportunity cost is gone. And so, it reminds me of that Tesla moment in 2020 where this thing was flat for like 10 years and then it just did a 10x.
Okay.
And that
That's
could be
where
the
you
case
need
for
to-
SoFi, but a lot
But
of
that's
these
where you need to say, are you a trader or are you an investor? Because if you're looking for opportunity cost, you're going to go with whatever's going to get you the most alpha in a short period of time. But if you're an actual investor, you
Yeah.
should have a 5 or 10-year horizon in your head.
Sure, absolutely. But this thing can stay depressed for another 5 years. It could.
100%.
It could go to a 3 PE. You don't know that, right?
It
And
could.
so my point is that like a lot of people are getting demoralized because they have expectations on the stock to do something, to be attached to the fundamentals, when in reality, all I'm pointing out is that those expectations are the primary source of your dissatisfaction, because the stock can stay detached from fundamentals for longer than you would initially think.
Markets can stay irrational longer than you can stay solvent.
There you go.
But at the same time, people should not have unrealistic expectations. And that's a personal problem.
Yeah.
I mean, that like I don't care. Like, once again, I don't care about what other people's expectations are. I don't care about other analysts. I am looking at this from a logical standpoint where there are a lot of opportunities, and eventually I think there's a higher probability of what I foresee as a bull thesis playing out than a bear thesis. Because if the bear thesis was going to play out, it would have played out in 2020 and 2021, but it didn't. So how on earth is SoFi going to go under if they manage their way out of the worst economic cycle that they could have faced, with their largest business segment being crippled, and they managed right through it?
Right.
I mean, it's just, so for me to change my mind, somebody's got to give me a real argument that makes sense. And I'd be more than willing to listen, get the biggest bear that has a good case on. I will not say a word. I will hear them out. And if they can change my mind, I'll sell everything tomorrow.
Yeah. But like, look, they've had multiple instances where they've pivoted or where they've come out on top. And for me, at least, every subsequent quarter that they triple beat, I build my confidence a little bit higher in management. And
Sure.
people might be saying, oh, like, why is Tev like giving Anthony Noto so much grace? It's because he's earned that grace over the past 2 years. And simply due to the PSUs, again, going back to the entire argument at the very beginning, like the incentivization that does in terms of having skin in the game, for them to reach their tranches, that's mid 2026, and the stock has to stay within these tranches or above them for 90 days. The tranches are $25, $35, and $45. 2026 is only 2 years away. If you take SoFi at $7 right now, that's anywhere between a 3.5x to over 6x on the high end for those tranches. And so if you look at that in a 2-year time span, for you to expect a 3.5 to a 6 times return on your money,
2.5, because they vest in June, I think.
what do you mean?
June 2026 is when they vest, I believe.
Oh, 2.5 years. Yeah. Sure. But my point is that is a very tantalizing risk reward for me to say, okay, I can make this bet, quote unquote, today, so that in 2.5 years I can get a 3.5x on the low end. Yeah. Name me somebody who wouldn't do it. Anybody would do that.
It's just, I don't know. The bear thesis is, there's nothing new with the bear thesis, and everything that they keep coming out with continues to get disproven. Like, somebody needs to come out with something that's going to stick.
Now,
there's just not a lot of meat to the bear argument at all. It just continues to. They continue to say things about SoFi, and SoFi disproves them again and again and again, quarter after quarter. The management has excelled, and just like Tevis said, I ended up going in heavy at SoFi just because of the management. I was like, okay, this is an amazing company. I've been tracking for a while. When I started looking at it, it was in the 20s, and I was like, I'm not touching that, or maybe 18. But as it continued to fall, and the more and more they executed, I'm like, okay, I just believe them. If they throw out a number, maybe they're sandbagging it, but if it sounds lofty, like they're going to hit that. They're going to do that. I don't know that they're going to hit 25 or 35 or 45. I do know this company is going to execute. They can only control the company. 2.5 years is really, it sounds like a long time, but for a business, it's actually not a long time. But they're doing phenomenal. And I don't see any personal reason why all of those numbers would not be conceivably in play at this point.
Yeah, and just one last thing I'll say is what this earnings has ensured all investors and the 400 plus people watching is it has given you confirmation of profitability and has allowed you the opportunity to buy the stock at nearly the exact same price than you were before you had that confirmation of profitability. And so essentially, you just got free information to buy SoFi at what people were buying it 2 weeks ago when it was a question mark. Are they going to be profitable or not? And that, I think, is a really huge gift that the market has given you in the short term.
Tanner, can you bring this up?
I'm trying to pivot out of this, but we keep digging deeper. Go ahead, Steve.
I mean, this is what matters. Members and deposits.
I don't think that the Bears are thinking that.
But that's the problem with the bear case. This does not show dissatisfaction with SoFi as a financial solution for its members. If it was, these curves would not be like this.
I get that, but I mean, you can look at a bunch of stocks that have great member growth and great deposit growth, that have a bad stocks. I think that what the Bears are more pointing at is the loan book healthy, and could there be a macro environment in which SoFi sees exponential losses, and
but that's every bank. Every bank has that problem. Like that is true for every bank.
But that's why JP Morgan holds a lower PE than, let's say a counterpart that has similar growth but no risk on its balance sheet, or not as much.
That side of the bear case is true for every financial institution. And if you go into a recession, the chances increase substantially because that means people are losing jobs. If they are out of work for an extended period of time, they may have more trouble paying back credit. You could have higher defaults. You could have bankruptcies. You could have homes going into foreclosure. Yes, that is certainly a risk.
Right.
At the same time, SoFi does a pretty good job of mitigating that risk. And even though it is not a foolproof plan, they are more restrictive with who they lend to than other banks.
Oh, sorry. Wait, we have breaking news. Sorry. Give me 1 second. Breaking news, ladies and gentlemen. Breaking news.
What the fuck is this?
Sorry. Macro Steve. Steve, we really need your help, okay?
His reaction to this shit.
The FOMC meeting had just recently happened this week, as well as a jobs report. This could deal in heavily with how SoFi might be treated by analysts and other retail investors. We need clarification. What happened at this FOMC meeting? What did Jerome Powell say about the March meeting? And how could this impact SoFi's loans?
You may have to bleep me a couple of times.
I'm ready.
Because the majority of the street and the majority of investors are freaking crazy.
I was just being careful.
You messed up. I tricked you.
Trigger finger Tanner.
I said freaking. Like, what's this trigger finger?
Trigger finger
What is
Tanner.
wrong with you? I didn't say fucking, I said freaking. All right, so look, since last year, nobody has taken Powell seriously. Mm-hmm. Continuously, I have said this is not what he has said. You can go back to my articles. You can go back to when I went on Finance Junkies and said it. Everybody who said, oh, he's cutting last summer, oh, he's cutting in September, oh, he's cutting in October, didn't cut, wasn't going to cut. That's never what he said. He took as much as a victory lap as he could at this meeting without taking a victory lap. And he made sure that everybody knows, yes, the situation is getting better. Yes, we understand the situation is getting better, but it's not where we want it to be. And we're not cutting in March. Get it out of your heads. And he, once again, unless he is just being ultra conservative and has the best poker face in the universe, there is basically no chance he cuts in March. It is more likely they're cutting in May or June. I think it's a toss up between the two of those because he said, once again, the reality is that they're probably going to cut 3 times this year. The market has been pricing in 6 cuts. And quite honestly, the economy is booming. It would have been horrible for him to come out and cut this week. And it probably would be bad if he cuts in March. Now, that is just strictly from an economic standpoint. You don't cut rates when the economy is booming. But there's a flip side to that. There is a debt problem. And I do think that the Fed needs a different way of looking at things.
I just wanted to bring up as well, what did you think about the jobs report in terms of expecting 185,000 new jobs? They saw 353,000. Okay. Unemployment rate remained at 3.7%, under their expectations of 3.8%.
Yeah. I mean, look, employment is good. Like, employment's good news. But at the same time, you got to be a little bit careful with it because the economy is running hot, and that could extend it. But back to the credit thing, I would rather say the Fed stay at 3% and cut or increase based on an as-need basis. Because right now, what they're doing to the – let me pick my words very carefully, so I don't want to get political. What they are doing to the
3%?
country – what they're doing to the country right now is crazy because we are paying more in interest on the national debt than the military industrial complex budget. Okay. Having rates this high has ballooned our interest on the national debt by it's over $800 billion right now. That's crazy. You also have many Americans that are hurting because interest rates are so high because they have some people needed to buy a car. Some people needed to move, and they're stuck in high interest payments. And that is prohibitive and restrictive. And I get it. The guy doesn't want to necessarily cut because when money's cheaper, people spend more money. And he, rightfully so, is afraid of inflation creeping back up again. That's the last thing they want. Because of all the work that has gone on, he's taken us to a soft landing right now. Like, the soft landing is happening. It's either a soft landing or no landing. Pick which one you want.
So could we, I want to pivot this to the rest of the panel, but I want more specifically on SoFi, especially with this jobs report on the idea of potentially no March cut. How do you guys feel this impacts SoFi whenever they said their expectations are considering 4 rate cuts this year? Their expectations are a 5+% unemployment rate by the end of 2024. Does this mean that potentially defaults might be lower than expected, but also rates might be higher, so harder to sell loans? Or how do we think about this? Roy?
Well, first, those expectations, I was kind of laughing through them at the same time because if you get 5% unemployment, you're going to get more than 4 rate cuts. If you stay, with really low unemployment, anything can happen as far as the rate cuts. It might be 4, whatever. So both of those things are not going to be true. But they're guiding it so conservative that they're actually saying, hey, our lending platform is actually going to shrink year over year. That's just the way it is. So, but no, I mean, if I think the only in this scenario, it's going to help them far more than it hurts, if it even hurts them at all, because we're not actually increasing rates. People know it's like, hey, this is the way it is, higher for longer. Okay, some people have to buy homes. Some people have to buy cars. Student loans are coming back. And I do expect that Q3 of 2024 is going to be an absolutely phenomenal year, no matter what the interest rates are at. But bottom line is, if people have good jobs, I believe that the average wage was up 4%. Correct me if I'm wrong on that. But that's really the only thing that's inflating right now is wages. And that's great. You don't want it to be too hot, but phenomenal numbers. Good news is still bad news. So that's why the stock market just kind of dipped down some. But for fintech, You want an economy that's strong, and that matters actually more than the interest rates.
I got a crazy idea. Let the free markets work themselves out.
Can't do that, man.
Of course you can. Of course you can. Let supply fill demand. I mean, enough with this. Let the free markets fix themselves. You don't play around with rates unless you absolutely have to.
The only concern I have with rates is the BTFP program. I think they're ending it in March, I believe. I would actually like to see a rate cut in March just because of that, just to ease a little bit of pressure, just in case, so they don't have to cancel a program, bring it back if there's pressure on banks. SoFi, I don't think would be affected either way, but that I could see as something that if banks start to topple, like Silicon Valley Bank last year, that could cause a lot of pain for us as holders temporarily.
Did you guys hear about NYCB? First of all, on the macro, like, we're not getting 5% unemployment, man. Like, it's not going to happen. It's an election year. Like, you're going to get a pump fake from January numbers because UPS laid off, 12,000 people. City's going to lay off 20,000. And it's going to seem really bad, but then the number of layoffs is going to normalize throughout the year. I just don't think you're going to get like that high unemployment. Like, it's going to be higher for longer probably than what the market expects. The market is always going to be hopeful, but the unemployment numbers, I think, in SoFi's estimate are just way too conservative.
He was right. I mean, they were wrong last year.
Yeah.
On both top and bottom. Definitely on the bottom side, though. EBITDA, I think, more than doubled their expectations.
Yeah. Did you guys see the NYCB stuff? It just cratered this week.
Yeah, I'm pretty pissed off at management right now.
Shareholder?
Did you own that?
Not a lot, but I do own it. I actually bought some today as a trade, some additional as a trade.
Yeah. Not a lot, like 40% less now, right?
Yeah, it took it. Listen, they I need to read the transcript like really thoroughly, but these morons could have done a better job at guiding last quarter, and they could have said, hey, we've never operated at over 100 billion in assets, and we need some time to figure it out. They took over Flagstar, they took over Signature, and it put them into a different category, and they freaking didn't do their math correctly, and they need to cut the dividend to build the reserves. Like, they could have warned about these things, and quite frankly, they shouldn't have waited till earnings to drop this bomb. They should have pre-warned, is what they should have done.
So not a lot for me is like 5K. Not a lot for Steve is like 100K probably.
So I just want to add some context there. New York Community Bank, like he said, acquired a bunch of companies while banks were in hard times. One of them, they bought a ton of assets from Signature Bank. Well, actually, they got them off of FDIC directly, but a bunch of assets off of Signature Bank. And that took them over the $100 billion in asset mark, which actually adds more regulatory scrutiny. They ended up, instead of doing 28 cents of EPS, they actually reported negative 36 cents of EPS, I think is the number, if I remember correctly. They took on $500+ million in losses that they did not expect. Weirdly enough, it was only from like two extremely large loans, which was pretty impressive, if you might say. They cut their dividend from 17 cents down to 5 cents, which is like a 70% cut there. And they got obliterated, which is bringing back the talks. Rightfully so. But bringing back the talks of, are we going to head back into a sort of a banking problem? And then in a couple months, this sort of a new program that was designed to help alleviate some of that pressure from the banks was the Bank Term Funding Program. And now they're removing it in March.
So I want to read something from their earnings call. Okay,
please.
This is from the second paragraph in their earnings call. Quote, we reported 2.3 billion in net income available to common shareholders, up from 617 million in 2022. We significantly diversified our balance sheet with commercial loans representing an increasingly greater percentage of total loans. Like, they start the conference call off with highlights and achievements.
Mhm.
So
That was for this quarter, you mean?
yeah,
That's hilarious.
like it's just you can't freaking make it up. And they go into explain that Signature Bank catapulted them to over 100 billion total assets, placing them firmly in the category 4 large bank class of banking institutions and all the stuff that they need to do. But it's like, so you made 2.1 billion in net income, and you guys aren't smart enough to know what's going to happen when you make these acquisitions. Like, it makes me question management. Like, what are you guys doing? Like, how do you not know the ramifications of growing?
So if I'm not misunderstanding this, they also are falling into that sort of problem of a more mature loan book, but so their coupon rates are lower than they need, but their cost of funding is going up, so they're running into harder times as well.
I need to really look through it. I haven't had time to truly
Gotcha.
go through
Can
it.
can I pivot us back to SoFi for a sec? So there's
I just want to say right before you say that, though, they also, very much like a traditional bank, unlike SoFi, saw a decrease 2% quarter over quarter in deposits as well. 1.3 billion down. I wonder, just real quick, and then we'll leave. If now that they've reported these bad earnings, does this start to cause panic of people saying, "Hey, I don't want to be where these Silicon Valley people were, where Signature Bank people were, where First Republic people were, and I'll just get my deposits out now," which might cascade this problem?
Dude, somebody on CNBC today said that JP Morgan still has them at an 11 price target and that they think that
$11?
things are going to be fine.
you know what else has an $11 price target? Lending Club from David Cavarini.
Okay.
Just saying.
I thought you were going to say SoFi to 11 for me. That was my, but
No. Okay, cool. There's two things I want to chat about. Number one is this tweet, Tanner, which I'll throw in the private chat. Don't throw it up just yet. Number two is on Monday, SoFi announced alternative assets. And I can pull up the press release, or maybe Tanner, because my computer is going to blow up. Maybe you can pull it up on SoFi IR.
Okay.
Steve, I want your take on this because it's just another offering for SoFi Invest members, the alternative assets offering. Essentially, ARK Venture Fund is a part of this. There's also funds that are private pre-IPO companies. There's funds that's real estate. There's mutual funds. I think it's initially starting at over 6,000 different funds.
It says coming soon, but a lot of people have gotten access to this,
So
if I'm not mistaken.
if you go to their IR page, you can take a look at the actual press release.
Okay. I actually just clicked through to this because it has all the...
There you go. Yeah. So again, I chalk this up as, great news because it's, again, more competitive advantages from a product perspective that separates SoFi Invest from other brokerages.
So
Yeah, you'll be able to buy into funds that have PayPal's buy now, pay later European portfolio in it. Sorry, go ahead.
So two things. The first thing is alternative assets, which is great because some people want the ability to invest in companies like Stripe, SpaceX, those types of companies. And while SoFi is not using a proprietary ETF, it at least allows individuals to purchase and hold this in their account on the SoFi platform. And with SoFi having a younger demographic, these types of things could certainly entice them. Great. I am more interested in the 6,000 mutual funds because this is huge. The 6,000 mutual funds goes right into my thesis of an asset management arm, because the very next thing is going to be they're going to have their own proprietary mutual funds, just like they have their own proprietary ETFs, and it makes them much more suitable for pension funds and 401ks from companies to have on SoFi, and SoFi can then double dip because they'll get that asset management for assets under management on the actual fund at the 0.07% or whatever they're going to charge, but then they'll get the actual fund administration fee for having all the funds on their platform.
Okay.
So they'll be able to double dip.
Hold on, pause for a sec. Tanner, flip to the second thing I sent you because I knew that Steve was going to bring up what he just brought up. So just teeing it
Yeah,
up.
yeah. You just gotta give me.
You're too slow.
I'm here.
Steve, I knew you were going to talk about that. So this is a tweet that Chris Hager made on Monday on Anthony Noto's 2026 roadmap. I just want to read the.
Look at that guy. Wait, where is he?
Who is that handsome guy? I just want to read the part that's screenshotted. So if we scroll down for a sec, this is Anthony Noto. For the 2023 through 2026 time period, we see 20 to 25% compound annual growth, assuming no meaningful change in the macro, blah, 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 and no significant business launches or acquisitions, such as, like, hey guys, wink, wink, nudge, nudge, we will not do these things if we want 20 to 25%. Small, medium business checking or savings. Number one, small, medium business lending, broader asset management business, insurance, broader credit card portfolio, new technology verticals for the tech platform business, new geographies. So yeah, you can scroll up and you can have the full list there in bullet points, Tanner. And so this is essentially the product roadmap for SoFi that they said, if we assume 20 to 25%, it has none of these things. It doesn't necessarily mean that they won't do these things. This is why I'm so bullish on the 2026 phrasing that Anthony Noto said, because there, if you read between the lines, he's basically saying like, hey, these are the things we already are thinking about right now in terms of expansion until like over the next 2 years.
Think about it like this. They've been able to get to where they are without business. Okay. Without business. These things are coming. I would be shocked if they're not here sometime in 2025 or late 2024. Okay. I would really be shocked. The guy is basically telling you what they're going to do. And it's everything that we've been talking about. And this is how they get to the next level, because 90 to, I think it's some crazy number I put in my article. It's like 95% or 98% of all jobs in the US are from small businesses. They're the number one freaking employer. Like, it's crazy. It's some crazy number. And you make this where small and medium-sized businesses have an outlet to utilize SoFi, they are going to gain tremendous amount of customers. And then you couple that with the asset management firm, and this is how they get to be a top 10 financial institution. We have said it time and time again, and these analysts are not looking at this. Yep. Whatever. So what? If SoFi stays down for a while, great. I'll just buy more.
It's so crazy. It's so crazy to me. Anthony Noto basically says, guys, read between the lines. I'm giving you the full product roadmap over the next few years. And meanwhile, analysts are like, I don't think they can hit 20 to 25%. I think it's going to be lower. Like, you know, the forecast is 2 cents under the bottom range. It's just so, you know, it's like that picture with like the photographer and the rhinos. Analysts are just looking in the wrong direction, man.
Yeah, so I knew in that moment, I was like, okay, Steve's got to be smiling, because small and mid-sized businesses, top of the list right there. And of course, you know, it was either a week or 2 weeks ago, they rolled out the third-party loans to the small businesses, small and mid-sized businesses. So they're heading that direction. You know, question is when, but it's not a question of if.
I wanted to add a couple things. One, I'm curious to know, and I don't know the answer to this, if small to mid-sized business account accruative to their growth at the start. What I mean by that is you look at their invest platform, you look at their credit card platform. These are major losers to their business right now.
Yeah,
$100 million a year.
100 million. Yeah, they're still losing. Yeah,
right. And I called it like no one else. Their credit card business came to a full stop this quarter because it's just not working for them right now. So they are not promoting that. In fact, I actually would believe that they're probably hiding that product right now. And now I'm sure if you go looking, I'm sure you can apply, but you might not get an acceptance.
So Tanner, I need to retract something I said. I was getting stats mixed up. There's roughly 33.2 million small businesses across America that employs just over half of all employees across America. So I was thinking about something else when I was getting excited with the 90% thing. I'm trying to find what that was. But half of U.S. employees are employed by small business. When you add small and medium size, this is a gigantic opportunity.
Yeah, yeah. And especially I think that the opportunity for small to mid-sized businesses, especially with Galileo. Like they offer all of these different, payment platforms and bill pay and card programs and corporate card programs that they could literally just offer to their SMBs for free. Like that's the one thing that I think is really, really exciting is that we would have a better offering than most. Like you're seeing Brex, if anyone is looking at Brex lately, they're a SMB fintech. They just laid off 20% of their staff. They're having a harder time. Not too hard. I mean, they're still in business. They're making good money, but it's an area that SoFi could build out. I just don't know if it would be additive to the business or if they're building it on Technisys, is it just like almost immediately accretive? So that's not something that I know.
don't think they're building it right on Technisys. And look, the partnership with MasterCard for management spend is huge. Anybody in the chat that is in business or has corporate P cards will completely understand how important that is to a company. And I mean, SoFi is just, they're hitting all the nails right through. It's going to take some time, but this is a fully vertically integrated company. They're going to have an offering for everything eventually. I mean, it's going to take time.
Now, I saw an email. I wanted to also bring this up. I haven't actually seen this tweet. I don't know who it was from, but supposedly one of the longtime viewers actually pointed out that someone stated that level 1 options might be coming this week. I don't know who else saw this. I haven't actually seen the tweet, and I haven't reached out to my own, sort of like people that I like to check facts with to see if that's actually the case. Because I heard 2025 now.
Yeah, so
that would be very interesting because the original timeline for level 1 options was Q1 2024.
The context is Josh made a post on basically asking like the help bot for SoFi around level 1 options, and they said, yeah, like we get a lot of requests for level 1 options. You can expect an update in a few weeks. It's not you can expect it to be live. I might be misquoting that, but I'm pretty sure that was the case. I talked about it earlier today.
Got you. All right. Roy, anything on that, on the new product updates that SoFi is putting out, level 1 options? If SoFi puts out level 1 options, what are they missing at that point? I'm curious to know because I don't have access to Robinhood. I'm still in archaic Canada, so I don't get to see the quality of products that you guys have over there. But what else does SoFi need? And I'd especially like Steven on this because he's definitely a very active trader. Investor,
Yeah,
I
I
should
mean,
say.
it's incrementally better, with alternative assets, the level 1 options. I know a lot of people actually are asking for that, and I've seen some of my my ex friends that I know are legit investors that they are going to move out of SoFi just because they feel like they're missing out a lot on level 1 options. It's for me, I don't go further than that, but level 1 options are like I honestly wouldn't be on their platform ever if they didn't have that available. So,
Right.
I think it's the UAI, honestly. Like the product will continue to improve. It's all right. It's not their best product offering at all. I've never been particularly excited on it. Robinhood's just a lot better. But I think the other thing is, as the market continues to improve, there will be people. I mean, we just keep hitting all-time highs, right? And eventually that starts translating, especially when that continues to get in the new news feeds, like, hey, new all-time high, new all-time high, new all-time high. As wages continue to improve, people will be like, okay, maybe I should invest a little bit. That's how it begins. That's how they get you. And in this case, SoFi, they're trying to help you get your money right. It's kind of beneficial if you're a new person to not have the level 1 options, but they need to take that off. And so hopefully it does come out this quarter. They will lose some people if they don't roll that out fairly soon. But still, it's the UI.
Steven, anything to add on that, or should I go on to the next part?
I mean, I can go either way on it.
What do you think SoFi needs to add in order? You're going to say advanced charting.
Asset management arm is way more important than options, but I do see the benefit in adding options because selling covered calls or writing cash secure puts is becoming much more normalized in 2023, 2024 than it was just 2 years ago. And that is a differentiator that would make somebody go with Robinhood over SoFi. So just from a pure competitive standpoint, it is important. But if I had to pick one or the other, I would rather the asset management arm than level one options. But I want both.
Yeah. Okay, so really quick, I just wanted to point out this comment because I thought it was so funny. I've never seen anyone make this joke. Anthony Nodo, awesome, love it. Or Tony Nodo, you're not even giving him the respect to call him Anthony. Back whenever he was working at Goldman, he made bad bets in the .com crash, and people were calling him Anthony Don't Know for a bit, but I like Nodo. Anyway, and then also this comment from Khan here. SoFi mobile app is now ranked 29th on the list of most popular financial apps. That might sound very high. That's actually much above the average. Usually they sit in the mid 40 ranges. They can sometimes bleed into high 30s. But so in the 20s, you're actually probably going to see for an early estimate on Q1, some pretty good growth, because whenever we were dipping into, like, we got as high as I think 19 in Q4, and that was the highest quarterly results that we've ever seen. So honestly, the Apple App Store rankings, daily rankings for SoFi, has been a great indicator to see member growth. So very excited to see this.
And on that note, and I know SoFi has a stadium and there's events happening, and so this might be part of it, but look at Google Trends. I'm sure you guys do. SoFi is becoming more and more of a household name. And, for some companies, it's like, it doesn't matter much. For a bank, it matters significantly. And so, yeah, I expect that user growth is going to be very good Q1 if this keeps up.
Yeah, looking positive so far. Okay, ladies and gentlemen, that's been the SoFi Weekly. You guys can check out Steven on X for Seeking Alpha, Roy on X. I don't know if you have another platform. I think that's it. Tevis and I are both on X and on YouTube, but you guys probably already know that by now. We are going to go on to the SoFi Weekly After Hours show, where we're going to listen to Steve ramble on with his charts in Meta and his earnings on Amazon and Meta. It's going to be a good time. Thank you all so much for watching.
Apple, Meta, and Amazon.
Oh, I forgot to mention, the After Hours show is for members only. So make sure you guys click that button below or click the links in the description down below.
Can you guys believe Tanner doesn't even give us a stipend? Like,
of course, boy.
This is why we had Bootleg Weekly earlier in the week.
We should do Bootleg Weekly more often.
I told you.
You guys want to
do Bootleg Weekly to compete with FinTech friends.
So, okay, so hold on. Slight segue. Somebody commented on one of the Bootleg Weekly videos saying it was such a breath of fresh air to hear us talking about other stocks that's not just like SoFi or FinTech. And that's what
the After Hours for.
That's all the validation that I needed personally to say, F it, Bootleg Weekly is going to be a regular occurrence.
Yeah,
ladies and gentlemen, thank you so much. But you guys are ruining retention and people are dropping off, so I'm ending it right now. Bye.
Okay. Thanks, everybody.